Hey everyone, and welcome back to the channel. Today we're diving deep into one of the biggest tech giants in the world, Alibaba Group Holding. You know them for online shopping, but there's so much more to this company, and it's currently at a really interesting crossroads. We're going to break down their recent performance, uncover their biggest growth engines, look at the challenges they're facing, and ultimately help you decide if Alibaba is a stock to consider or hold right now. Let's get into it. If you haven't already subscribed to our channel, please subscribe to our channel. Your support truly makes a difference, enabling us to produce more stock and fundamental analysis content. But first, a quick disclaimer. Please note that the content presented in this video is for informational purposes only and does not constitute investment advice. We strongly recommend that you seek proper guidance from a qualified financial advisor before making any investment decisions. First, let's talk numbers. Alibaba's recent financial reports paint a mixed picture. For the full fiscal year 2024, their total revenue grew by 8% to over $130 billion. That's solid. But in their most recent quarter, Q4 fiscal year 2025, while revenue was up 7% year-over-year to $32.6 billion, it actually missed analyst expectations. Now, here's where it gets a bit tricky. Their reported net income, which is their profit, has been pretty volatile. Sometimes it's way down, like a 96% drop in one quarter. But this is often due to non-cash items, like changes in the value of their investments. When you look at their adjusted earnings, which gives a clearer picture of their core business, they actually saw a healthy 23% growth in Q4 FY 2025. So don't let those big GAAP numbers scare you too much. The underlying business is often more resilient. What's driving some of these fluctuations? A big part of it is investment. Alibaba is pouring money into new areas, especially cloud infrastructure, which temporarily impacts their free cash flow. That's the cash they have left after expenses. For example, free cash flow dropped 76% in Q4 F5 due to these investments. But despite that, they are still committed to shareholders, repurchasing $11.9 billion in shares and increasing their dividends. This tells us they have a strong balance sheet and confidence in their long-term cash generating ability. So, where is Alibaba looking for future growth? They've got some powerful engines. E-commerce core, Taobao and Tmall. This is their bread and butter, still making up nearly half of their total revenue. In Q4 FY 2025, this segment grew 9%. They're focusing on a user-first, AI-driven strategy, and their 88 VIP loyalty program for their highest spending customers has seen double-digit growth, now with over 50 million members. This means more loyal, frequent shoppers, which is great for business. While they've lost some market share in China to competitors, their overall sales volume is stabilizing. They're even investing heavily, like a $7 billion subsidy program to bring shoppers back and keep merchants happy. Cloud and AI, this is a massive focus. Their cloud intelligence group saw revenue jump 18% in Q4 FY 2025. What's really exciting is their AI-related product revenue, which has seen triple-digit growth for 7 quarters in a row. Alibaba is investing a staggering $53 billion over the next decade in data centers, especially in Southeast Asia, to capitalize on the huge demand for AI. They've even open-sourced some of their AI models, like the Quinn series, to encourage innovation and drive demand for their cloud services. This is a long-term play, and management believes AI will define the next 10 to 20 years. International Digital Commerce, AIDC. This is a high-growth area, with revenue surging 22% in Q4 FY 2025. They're using a dual-track system, helping international brands sell into China and acquiring local e-commerce platforms in developing markets like Southeast Asia. Analysts expect this segment to grow significantly and even break even by fiscal year 2026. Logistics, Cnow. Their logistics arm, Cnow, is crucial for their e-commerce empire. It's an asset-light model, meaning they partner with others, which makes it very scalable and efficient. They handled millions of cross-border packages daily, competing with global giants like FedEx and UPS. Beyond these, they also have growing local services like food delivery and mapping, and a digital media and entertainment group, all contributing to a diversified business model. Now, let's be real, it's not all smooth sailing. Alibaba faces some significant headwinds. Intense competition. In China, their e-commerce dominance is being challenged by rivals like JD.com and PDD Holdings, Pinduoduo. While Alibaba is still the largest by merchandise volume globally, they've lost market share in China, dropping from 52% in 2021 to 41% in 2024. In cloud, despite being the leader in China, they are up against fast-growing competitors like Huawei Cloud and Tencent Cloud. They've even cut prices by 55% on over 100 core cloud products to stay competitive. Macroeconomic headwinds in China. Consumer spending in China is still a bit fragile. Retail sales are recovering, but they're not back to pre-pandemic levels, and consumer confidence is uneven. This slowdown was a key reason Alibaba missed its Q4 2025 forecast. Their $7 billion subsidy program is a direct response to this, aiming to boost spending, but it could squeeze their profits in the short term. Regulatory and geopolitical risks. Alibaba has faced significant regulatory scrutiny in the past, including a $433.5 million settlement related to Ant Group's failed IPO. There's also the broader risk of Chinese companies being delisted from U.S. exchanges, plus U.S. export bans on AI hardware like NVIDIA GPUs mean Alibaba has to rely on domestic suppliers, which could put them at a technological disadvantage. However, it's worth noting that S&P Global Ratings recently affirmed Alibaba's A+ credit rating, signaling strong financial health and stability. Financial risks. While they have a strong balance sheet, those heavy investments in a cloud infrastructure are putting pressure on their free cash flow. And as we mentioned, their reported net income can be quite volatile due to investment gains or losses. So it's important to look beyond just that headline number. So what do the experts think, and how is Alibaba valued? The stock is currently trading at a forward price earnings ratio of about 10.39 times, which is significantly lower than the industry average of 24.70 times. This suggests Alibaba is attractively valued compared to its peers, especially considering its market leadership and strong balance sheet. Analyst sentiment is overwhelmingly bullish. Out of 39 analysts, 37 recommend a buy with no sell ratings. The average 12-month price target is around $163, representing a potential upside of over 50% from recent prices. This strong positive outlook indicates confidence in Alibaba's strategic direction and long-term potential. Looking ahead, analysts expect their Cloud Intelligence Group's revenue growth to accelerate, and their international digital commerce segment, which is already growing fast, is projected to break even by fiscal year 2026. This shows a clear path for their investments to start paying off. All right, let's bring it all together. Alibaba is in a period of strategic transformation, shedding non-core assets and sharpening its focus on its powerful e-commerce core and the massive opportunity in AI-driven cloud computing. They've got a strong financial foundation, they're returning capital to shareholders, and they have clear growth engines in international commerce and AI. However, they're navigating a tough competitive landscape, a fragile Chinese economy, and ongoing regulatory uncertainties. Given all these factors, the strategic pivot, the attractive valuation, the strong analyst sentiment balanced against the very real challenges, Alibaba holding is a consider for long-term investors. This means if you're looking at Alibaba, you should be prepared for some short-term volatility. Keep a close eye on a few key things. Free cash flow. Watch for signs that their heavy cloud investments are starting to stabilize and contribute positively to cash flow. AI monetization. See how quickly their triple-digit AI revenue growth translates into significant overall profitability. International commerce. Monitor their progress towards profitability in this rapidly expanding segment. Alibaba is making big bets on the future, and for those with a long-term horizon, it could be a compelling opportunity. That's our deep dive into Alibaba. What do you think? Are you considering investing or are you holding off? Let us know in the comments below. Don't forget to like this video and subscribe for more in-depth analyses. Thanks for watching, and we'll see you next time.